So in this video, we are going to talk about exits and how to hold winners longer, okay? Now, the last video, we talked about how to enter, and we talked about the different setups. I only talked about, putting a stop loss on only 2 setups. And the first one was a 1, 2, 3 setup, okay, which is right here. So we have a 1, 2, and a 3. And like I said before, you don't have to count it. Just see a lower high, and that's it. Vice versa, if it's going up, you see a lower low, okay? So we have a nice little impulse right here, pulls back to that nice swing low right here, gave us a nice 1, 2, 3. You want to enter as soon as it hits, goes below this pivot or this swing low right here, okay? And you want to put your stop loss above this high right here, okay? And the same thing with a broken 1, 2, 3, guys, okay? We have a the market try to go up and it can't close above this high. We want to sell this, and we're going to put our stop loss 1 tick above this candle right here, okay? Same thing with a trend line break. Now we see this swing low right here. If this was a regular trend line break, we usually like to get in at this swing low, okay? But it's so far away. So like I said, I would just basically get in at as soon as it breaks, okay? And then I'll put my stop loss right here, okay? Now let's look at the setup bars, because the setup bars is just very simple. So, good example right here, guys. Impulse, it pulls back to the swing high right here. We have a nice engulf trap, okay? So we're looking in to get in the next available bar. We get in right here. As soon as this bar breaks this bar right here, we put our stop loss 1 tick below this candle, okay? Now, I know some of you guys gonna say, what's a tick? Well, the market, the futures market, it moves based on ticks, okay? The forex market is a pip, okay? So 1 tick below this right here, not 1 point, but 1 tick below this candle right here, and then you basically wait for a 1-to-1. So all of my entries, okay, minimum, I'm looking for a 1-to-1, okay? This is day trading right now. Even swing trading, I'm looking for a 1-to-1. Now, there are times where I look for more than a 1-to-1, and we're going to get into that later. But a 1-to-1, okay, is basically whatever you're risking, whatever size candle this is, okay? So let's say this candle is 10 ticks, right? Well, as soon as it goes 10 ticks in my favor, I'm looking to get out, okay? Now, you have to understand, every candle is not the same size. So let's say that I went short, right here, okay? And let's say that this candle right here, instead of being 10 ticks, let's say it's 15 ticks. Well, if this is 15 ticks, well, I'm still looking for a 1-to-1. I'm still looking for 15 ticks. So if I'm getting right here, underneath this candle right here, I'm looking for the market to go 15 ticks in profit, okay? So whatever size the candle is, you're looking to get in, and you're looking for a 1-to-1 based on that candle size, all right? So that's pretty much it when it comes to putting your stop loss and looking for your first profit target, okay? So you're going all in and all out your first target. Now, break evens. Let's say that you are looking for the market to go higher, okay? And let's say that you want to look for a 2-to-1. So a 2-to-1 is basically whatever you're risking times 2. So let's say you're risking $50 on this trade right here. Well, you're looking for the market to go up, okay, 2 times that amount. So that would be $100, okay? So you're looking to get $100 on that trade. Now, how would you do that? So basically, let's say that this candle is 10 ticks, okay? So instead of getting out as soon as it goes 10 ticks in your favor, you're gonna get out when it goes 20 ticks, because that's 2 times your money, okay? So you're looking for 20 ticks out of this, and then once you get the 20 ticks, you get out with profits. Now, if you go for a 2-to-1, guys, right, and the market goes 10 ticks in your favor, and it comes back in, okay, to your entry, you're gonna get out break even, okay? Let me explain that once again for all you new guys, okay? Now, I'm not saying that every candle is going to be 10 ticks, whatever your candle is, all right? So let's say that, for example, this candle is not 10 ticks. Let's say it's 14 ticks, okay? Now, you're looking for a 2-to-1, so you 14 times 2, okay? Which is, I believe, 28. So you're looking for the market to go 28 ticks in your favor, okay? So let's say that it goes only 14, okay, and then it comes back to your entry, okay? If the market goes up 14 and it comes back to your entry, even though you're looking for a 2 to 1, you're going to put your stop loss, okay? So you're going to move up your stop loss to break even, and you're going to get out that trade, okay? The reason why you want to get out that trade is because it's a strong possibility the market might come back and stop you out, right? So that's for break evens, okay? It's usually you're using break evens if you're looking for a much higher target, okay? So if you're confused about that, just rewind this and listen to this over and over. It's very simple. If you're looking for a 2x, so let's say this candle is 10 ticks. You're looking for 2x, which is 20 ticks. If it goes up 10 ticks in your favor, as soon as it goes up 10 ticks in your favor, you put your stop loss to break even, which is the entry candle. Okay, so you enter right here. Okay, you put your stop loss right here, so you protect yourself. Now, if it comes back down and hit your stop loss, guess what? You're out, but you're not gonna lose no money, right? Probably a little bit of commission, but that's about it. So, okay, so let's get into some juicy stuff. How to hold longer, okay? Okay, so the first way to hold, okay, longer is you're going to look for some type of consolidation break while you're in the trade, okay? Good example, okay? So we have a nice little impulse right here, okay? And we have a horizontal line right here. Let's say you took the trade, okay? And let's say you just, got a quick 1-to-1, boom, you're out. Now, it gave you another level right here, okay, that market, you can tell market pull back to this level right here. So as soon as market got to this level right here, you see this nice, a nice little strong bar. You can even say this is an exhausting bar right here. And next you know, boom, followed by another strong bar. Okay, you got in. Let's say you got in right here, and you're looking for a quick 1-to-1. So let's say a 1-to-1. Let's measure this real quick. Let's say your 1-to-1 is somewhere around here, right? So let me see, somewhere around here. So we didn't get to that 1-to-1 yet. Okay, so you're waiting. You see the market consolidating, not doing anything. So you're waiting. Now, usually when you see consolidation, guys, what that means? That means that the market is correcting, and usually you see a impulse out of that correction, right? So that's what we're going to take advantage of. We're going to take advantage of this correction right here, okay? So if I'm in this move right here, guys, right, and I'm waiting for my 1-to-1, and I didn't get the 1-to-1 yet, and I see consolidation, I'm saying, you know what? I'm not even going for a 1-to-1 no more. I'm actually going to go for a 2-to-1, because as you know, when the market breaks out of this, okay, it's a strong possibility it's going to push the market up even more, and I can definitely look for a 2-to-1. Okay, so that's one way to hold longer when you are in the trade. Okay, so let's go to the next one. Okay, so the next way to hold your winners longer, all right, is when you get in. So let's say that you got in right here, right? You see a nice little 1, 2, 3 right here, or even a strong solid bar right here. Let's say that, okay, I notice we have a nice trend line. Okay, so the next way is a trend line break. If you see a nice trend line break or some type of channel break, okay, you can actually hold longer. Now, when you see a trend line break, a lot of times the market will go probably 90%, okay, and sometimes bounce back up. So it's up to you if you want to hold for that, that big move, okay, back to the low, or just maybe 90% of the move, maybe to the last candle rate, which is right here. So it's up to you. If the market is very weak, we had a nice sell-off right here. So me personally, it's a possibility maybe we can hit the low. Okay, so I'll probably either test the low or maybe get out 90% of the move. Okay, so you have to realize that either you get out 90% of the move or you get out at the low. Okay, it's something that you just have to figure out, do I want to do that? So this is another way you can actually hold your winners longer. Okay, so let's go to the next way. Okay, so the next way is if I see a nice big 1, 2, 3. Okay, a 1, 2, 3 is simply the market creating either a lower high or a lower low. Okay, so this is a lower low, and let me show you guys the numbers real quick. Okay, so we are at the drawing board. So this is the 1. Okay, this is the 1 right here. This is the 2. Okay, and this is the 3. Now this is a big one right here, very, big 1, 2, 3. But all it is, like I said, all it is just a lower high. So the market was going down. It gave us a nice little smart money impulse. Okay, came back to this lower, swing low right here. It bounced off. Me personally, I will get in right here. Okay, a nice little strong bar, close right at the high. Get in right here. Now we're gonna basically, you can, the way you can actually do this is two ways. So let me show you. Okay, so when it comes to 1, 2, 3s, guys, it's usually, right, we have a nice little pop. Okay, now you can actually take, you see this impulse move, take it, measure this impulse move, and you can take it to this low right here, guys, and put it right here, and usually the market will go to that mark right here. Okay, sometimes you can actually put it right here. Okay, and sometimes it will go either to here, the top of it, or at least 80% of the move. Okay, so when I see this right here, and I'm saying, oh, this looks like a nice little big 1, 2, 3, I enter right here. Minimum, I'm probably going to get out right here, and maximum, I'm probably going to get out right here. So I have to figure out, okay, you know what, should I hold right there or should I hold right there? Now, if you're new to the markets and you're not used to holding, you definitely gotta get used to holding, because some people are very, very, very quick to take profits. So if you're, if you're new to the world, or new to trading, basically maybe you want to go for the first one. Okay, but a lot of times you will see it go to at least 80% of this move right here. Okay, so that is the big 1, 2, 3. Now let me show you guys the next way you can actually hold your winners longer. So the next way, guys, you can hold longer is, just measuring the market. Okay, doing a measure move. Okay, now if you get a nice little impulse right here, guys, you can take this and measure this impulse right here, and for the most part, a lot of times it will come to this move. It's similar to what we was talking about in the last example, but the last example we were talking about the 1, 2, 3. So a 1, 2, 3, usually it tries to come back to the low and create a new low, right? Now this is not like a regular classic 1, 2, 3. Okay, it shot up, it hardly pulled back, and it kept going. Okay, so what you could do is basically take this leg right here and measure it right here. And if you remember the numbers video what we talked about, that second leg, usually that second leg, right, is longer than that first leg. So if you know that, if you know this second leg is longer than that first leg, you know what, you say, okay, you know what, I'm in this move, let me see if I can hold longer. Another confirmation on this trade, right? Let me show you guys real quick. Let me erase this so you guys can see. Notice how we have the impulse. It pulls back to this nice horizontal line right here. We have a nice little tail bar. We got in. Now notice it didn't give us our 1 to 1 yet, right? And what do we see? What do you see right here, guys? Consolidation. Okay, so that's another confirmation to say, you know what, let me hold longer. Most likely this thing can give me a nice 2 to 1, or even 3 to 1, or even 4 to 1. Right? So that's another way, guys, you can actually hold longer when it comes to your winners. Right? So let's go to another example. Here's another example of the measure move, guys. Nice little impulse right here. Okay, have a horizontal line right here, guys. It came back to here. It gave us a nice little engulf right here. Okay, got in right here, and you can, if you notice, if you can, like, basically realize this is another breakout too. Okay, so if I was in this move, I would basically look for at least a 2 to 1 or a 3 to 1. Okay, because we have this measure move right here. We copy it, paste it on top of this right here. I mean, we have a lot of room to go. Okay, a lot of room to go. Okay, this is a very strong push. And then it pulled back to this horizontal line. It came back. We got in right here, and you can look for a nice little winner on this trade. Okay, so let's go to the next way you can actually hold your winners longer. Okay, so here's another way to actually hold your winners longer. And before I even get into that, guys, usually when I hold my winners for a 2 to 1, 3 to 1, 4 to 1, it's usually that first push of the day, right? If the trend has been, going on for a long time, when the market is open, basically you have to understand the market is somewhat like a rubber band, right? If it keeps going, eventually it's going to snap back. So I like that first initial push, and then I would like to, see if I have the ability to hold for a longer move, unless, okay, we get a nice little deep pullback. Okay, if we get a nice deep pullback, even if the market was basically trending for a long time, we get a nice deep pullback, then I will look for maybe a 2 to 1, and I'll show you guys right now. So if we get a nice deep pullback like this, okay, and let's say the market was running, for a long time, we get a nice deep pullback like this, yeah, I don't mind holding for a long time, or for a 2 to 1 or more, because we have a lot of room for the market to go back to the lows. Okay, but for the most part, I want that initial push, especially when the market just opened. So let's go back to that example. Okay, so what we have here, guys, we have a nice little impulse. Okay, so we're looking for the market to come back to this level right here. Now it came back to this level, gave us a nice little tail bar right here, went short, right, stopped us out right here when this bar went above this candle, right? Fine, it is what it is, right? We look for another setup. So if it give us another setup, we want to look for it. We do have another setup. If you notice, you see this engulf bar, so this could be an engulf trap right here. And also this bar right here was an engulf itself. So as soon as this bar went below this bar, I'm in the market again. Okay, so if you get stopped out, just wait, and just wait. If the market is still at this level right here, this horizontal level, just wait for another setup. Okay, if it gives you another setup, then take it. Now it gave us another setup. Okay, now a lot of times when the market stops you out, okay, you will notice that when the market does finally decides to go down or vice versa go up, it would have a nice little push down. Okay, and a lot of times you could get a 2 to 1 or even sometimes a 3 to 1 out of this move. So usually I look for a 2 to 1. So let's say you got stopped out right here. Okay, fine, you're down, let's say you're down $50. Okay, you're back in this move, you're looking for a quick 2 to 1. Okay, now you get back your $50, and plus you can be in the green. So usually when I get stopped out, I don't worry, because I know that if they give me another entry, okay, that entry would probably put me in the green, because I can look for a 2 to 1. So re-entries, okay, guys, do not be scared of re-entries or getting stopped out, because that re-entry can actually gain back your money plus some. Okay, so this right here, believe it or not, okay, if you measure this right here, we can basically either get a 2 to 1 or even 3 to 1. So one right here, okay, and copy paste this. Let me see, one right here. Yeah, so a nice little 2 to 1, okay, and it could be a 2.51 if you went all the way back to lows, okay, because this move right here definitely has the ability to go right back to the lows. All right, so let's go to the next way you can actually hold your winners longer. Now, this way is basically looking for some type of fake breakout, right? And then it comes back to a horizontal line, okay? Now, we have a nice little impulse right here. Smart money comes in, okay? Now, we're looking for a price to come back to this level right here, of course. Sometimes it doesn't come to this level, so we're looking for the next available level. This would be right here or right here, okay? And it came right there. It popped up, okay? Gave us a nice little tail bar right here. Okay, definitely that would be my entry. Now, what I notice is when I see the market, right, have a fake breakout, slams, stop the retail traders out, or stop people out in general. You don't have to be retailers, right? Stop people out and come right back and snap right back. Okay, I usually notice that the market will basically, go far. Okay, so if I get in this move, I'm looking for a 2 to 1 or even a 3 to 1. Okay, let me show you guys another example real quick. Okay, so the market was going down, hit support right here, gave us a nice little impulse. Okay, we're looking for the market to pull back. Now notice how we have this fake breakout right here. It snaps back, stop, okay, a lot of people out, and then it went back up. Notice we have this nice tail bar. Me personally, I would get in right here. Okay, we have this impulse. This would be a level I'm looking at. Okay, it came close enough, and then we have another level right here. Okay, so it bounced off this level. I would definitely get in right here. Nice tail bar right here, and I will look for at least a 2 to 1, because I know this move right here have a lot of energy behind it, because it's stopping people out, and as soon as it stops people out, it snaps right back up. Okay, So I like this move, and basically this is another way, guys, you can hold your winners longer. So let's go to the last way you can hold your winners longer. Okay, so the next way you can actually hold longer, if you see it, go to the 60-minute chart, okay, and if you see some type of trend line break or channel break, okay, on a 60-minute chart, and you're trading around that hour, okay, I will look for a longer move. So let me show you guys real quick. So this is the day where we had the 60-minute breakout, okay. So a couple of things I noticed, okay. You can wait for the breakout, okay, or you can anticipate the breakout. So I do see the market breaking this right here, guys, right? We have a nice little impulse. It came back to this area right here. Nice little rejection right here, guys. Tail bar, you can definitely get in, right? That's one way. But that's a little bit aggressive, okay? If you're new to this, basically wait for it to break this line, okay? So you can wait for it to break this line. We do have a nice little impulse right here. Came back to this area right here, guys, right? Which is right here. Close enough. And then it gave us a nice engulf bar right here. And we look for a nice little winner right here off this trade, right? Nice little 2-to-1, sometimes even 3, 4, 5-to-1, right? But I want you guys to notice something, okay? This is when it, you know, it broke out a little bit. So remember, we didn't really, if you look at these trades right here, it didn't really break this trend line right here yet. This is the real break right here, guys. This break right here, this is the real break, okay? So, like I said before, if you really want to, it's probably best to wait for this break right here, okay? Because all these breaks right here, you're just basically anticipating the breakout, okay? So this break is the real break. Now, if it pulls back to this area right here, okay, which it did, okay, you can get in and hold, okay? So me personally, I would get in. We see how it pulled back to this area, and it gave us a nice engulf bar right here. This bar went higher than this bar, and then went below this bar, right? And I will hold this trade all the way back down to the low, okay? All right? Or maybe you can hold it, maybe if you want to, just hold it 90%, maybe to this candle right here, okay? But definitely, I would be, me personally, I'll probably just hold it all the way back to the low, since I know this is a 60-minute trade. Now, I want you guys to see this, guys. Look at this, okay? You went, let's say that you got in here right here with the engulf right here, and this is your wrist right here, right? Now, imagine you basically holding this all the way down to low, okay? We have that one. I'm trying to do a measure move right here. So we're going 1, 2, we got, so this is how many times it moved down, okay? So we got 1, so we got 1, 2, 3, okay? I'm gonna pause this video. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8. 8-to-1, okay? So let's say you was risking $100 on that trade, you got 800 back, okay? This video alone is worth whatever you paid for this course, okay? 8-to-1, if you get one of those, guys, whew, man, this is why you have to learn how to hold your winners, because when you learn how to hold your winners, it will help you build your account. So basically, this right here, guys, will help you build your small account or even big account. Of course, you're not gonna get 8-to-1 all the time, okay? Sometimes you're gonna get 3-to-1. Sometimes you're gonna get a 2-to-1 or a 4-to-1. Okay, this day right here was very volatile, so it gave you an 8-to-1, and sometimes you will get these, okay? And these type of moves, guys, like I said before, holding your winners will help you build your account, okay? So this is the end of this video, guys, and I will see you guys in the next video.